Hey there, today we're going to talk to you about a real estate investor who specializes in a unique niche, vineyards. Learn about this booming industry and how investors can get on this opportunity. All that and more coming up.
Welcome to the Wealth Through Real Estate Investing Podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and to reach the lifestyle you always wanted. And now, your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing Show. This is your host, Dwaine Clarke. Back again, we have today Mason Moreland. Mason is a partner at Texas Vine Country, which operates Canted County Vineyards, one of the largest vineyards in Texas and the only vineyard specializing in mechanized production. Mason, thank you so much for joining us on the show. And how you doing, my friend?
I'm doing awesome. It's a little chilly, and we actually do have snow here in Texas.
Yeah, given your background, yeah. Yeah, I really appreciate it. You had mentioned Texas, and me is not so aware of how large the state is, that there's parts of the state that actually have snow. So it's interesting kind of giving us a glimpse of what's behind you, because when I imagine Texas, I'm thinking like, sunny and hot all the time. And as I'm kind of learn more about the geographies of our country, you kind of learn, there's some places actually do have some snow. So I really appreciate you taking the time today from Texas, and really interested to learn more about this type of opportunity. As from this show, we talk a lot about real estate investments in the different asset classes. But for people not familiar, people actually can invest in these different types of investments. So really interested in learning more about that. Before we kick things off, would you mind talking about your background in the wine industry and a little bit about this opportunity?
Yeah, sure. So some background about me in the wine industry is not much. I'm not a wine or vineyard guy by trade. Definitely from the real estate side. And honestly, that's the reason I got into it, is because it makes sense, right? So, my formal education is wildlife biology. I am a professional wildlife biologist, and do environmental consulting and things like that. But about 8 years ago, started doing real estate investing with my family, my brother and my dad. We own Moreland and Sons, and we specialize in single family rentals. We got about 15 doors of that, and that's in Texas. And we're doing that for quite a few years there, and quickly realized, hey, this isn't scalable. Like, you can only get so many single family rentals in so many cities across a state as big as Texas and still be able to manage it yourself. So we knew we either needed to change or develop systems or die, right? Do something, right? So we looked into multifamily, and got about as far as you can go to get a multifamily property without actually buying it. Got all the way through our option period and forsook all that money. Just said, this is going to be a money pit. This isn't going to work. Let's rethink this strategy and look somewhere else. And so we kind of stalled out on that for a few months, just recovering sort of from that experience, right? It's interesting enough when you're doing a syndication. It's still pretty complex when you're trying to knock one out by yourself, and especially when it doesn't go right. And I was talking with some friends of mine, and they were involved in the Texas wine and vineyard industry. And just for some context, it's super new here compared to anywhere else. We are definitely below New York, Washington, Oregon, and California in production. We've been growing grapes in the state for a long time, but not really commercially. Anyways, they were involved in trying to bring some really new concepts to the state and modernize things. Texas is really behind California, maybe like 20 to 30 years as far as tech and the market on the vineyard side. And so what I started to see was an opportunity, right? You see a market open for disruption, you're going to want to look into it. I really specialize in underwriting deals and doing complex underwriting things, business models that are strange, So this was right up my alley. So got right to work trying to figure out how this would function, and ended up coming across, like I said, some new and innovative tech and methods, at least for us in Texas, that they're using in California that we can use to be disruptive in the industry, and that's mechanization. So that's kind of how we got to where we are now.
Can you, for people, and this includes me, as far as what is mechanization, what's that whole process is, and then we'll get into kind of the broad overview of investing into something like this, and kind of like, how do you get started, even, know where to start actually.
Yeah, for sure. And I picked this background for a reason, actually. This is one of our partner, Rusty's, I believe it's out in his front yard, basically. He's got his own vineyard on his property. He lives on several acres. But this is what you would call a VSP, or vertical shoot positioning trellis system. The trellis is the system of wires and T-posts and posts that hold the vines up. So what you can see is kind of above my shoulder here. Let's see if I can get my directions right. Just right above my shoulder here, where the main arms of the vines first reach that first wire. And that's called the main cordon. So it goes up and then out, and it forms two arms, and then all the shoots come up like this. And that's really almost all of what's done in Texas right now. The problem with that is, as you can see, all those shoots going straight up, they have to be captured in a series of catch wires. They're up above that. So you've got not only your main cordon wire, where your vine is actually growing its little arms off of the main trunk, but you've got all these shoots that you're trying to catch with more pairs of wires, up to 11 wires on some setups. With mechanization, what we do is we do a completely different trellising method. We have one wire and one main line of posts. The vine is trained up the post and wire to that one single horizontal wire that's significantly higher. What we call the system's high wire, because the cordon is about double. So instead of here, it's maybe up here on that picture behind me there. And what that does is you just have basically a tube of production, right? All of your little shoots are coming off that one tube, and when you go to do things to it, it makes it a lot more conducive to do mechanically with a tractor. So you can prune it by taking blades and just making a box around it on the tractor, and the tractor actually straddles, or the implement straddles, the vine row. So when you come along a post, it'll just pull the blades back out, go back around it. So you can prune it all mechanically. It makes it very easy to harvest mechanically with the tractor. Makes it very easy to knock out any excess fruit that the vines are producing, so you can hit your fruit quality goals with a tractor. Just for some context, spoken with some other folks out on the West Coast that are running VSP that is mechanized to the extent they can, and they plan on one person for every, I think it's 8 to 10 acres, something like that. I mean, it's pretty high. We plan on 1 to 2 people per 320 acres to run vineyards. So it significantly reduces the overhead. You do have a lot higher initial costs, right? You have a whole lot more posts, but what you're able to do is to cut down on overhead. You're able to produce a lot higher tonnage of grapes at high quality. And you're able to simplify things. Just that streamlining helps a lot.
And as far as compared to kind of, the other major growing states, like you mentioned, New York, California, competing with them, is it because you're going through this process to become more efficient as far as kind of the environmental abilities? You still have the same abilities than these other states to produce as much and the same type of quality? Is there any difference in, taste or sweetness that makes you guys more convenient, that, more resellers will come to you guys compared to the other states as far as kind of supply?
That's a good question. So California has a ton of vineyard. And when I say that, I mean almost 1 million acres. They have a ton of vineyard. So pretty much every other state on that list is including Washington, Oregon, New York, other big producers. If they aren't just barely meeting their own needs as far as winemaking, providing enough grapes to make the wine that they make in the state. They're not. They're importing juice or fruit from California, and that has shipping costs attached to it, right? So, for example, in Texas, we've got it varies day to day. We've got 500 to 600 wineries in the state permitted, and the amount of wine that's produced in the state of Texas equals about 10,000 acres worth of grapes, just roughly. In the state of Texas, we only have about 5,000 acres of grapes that are bearing fruit. So we actually import from California the remaining amount in bulk juice from their vineyards. So what we're doing is we're actually buying mechanized vineyard fruit from Fresno, Central Valley, California, shipping it in a truck all the way over here, and then making wine in it to put a label on it from a Texas brand. We can't call it Texas wine, but we can mix it with Texas juice to an extent to still call it Texas wine. But what we're trying to do is not so much compete with California and New York and Washington and Oregon directly as far as, we want to take them out or something. What we're trying to do is we're trying to cut off these massive, expensive imports relative to what we can do here. We have the same break-even cost or better than California. Land out here costs $3,000 to $5,000 an acre versus $20,000 to $30,000 an acre in California, and all our other inputs are the same cost. So we're able to compete with that, and what that does is it really opens up a market for us outside of the state of Texas too. So we have that 5,000 acre deficit that we can go fill in state. Well, then there's all these other wineries in all these other states just east of the Rockies, just between the Rockies and the Mississippi River, for example. There are the same amount of wineries there as there are in Texas. And the acreage of grapes is significantly less than what Texas has. So they're importing a whole lot of juice too. And what we can do is we can actually ship bulk juice significantly cheaper than California can do it, but with the same or better break-even cost on fruit.
Is the state recognizing this need and be able to compete, to bring more business to the state? Are they opening up more ability for guys like you to purchase more land to produce things like this? Is there any regulation that's been opened up, or is this something now that you guys are seeing this opportunity and just taking advantage of?
Definitely just seeing the opportunity and taking advantage of it. One of the reasons that a whole lot of people are moving out here to Texas is the regulatory environment's really favorable, right? We don't have nearly the tight restrictions on what kind of varieties you can plant like you'd find in Europe or in California. We can, I keep saying it. I said it the other day when I was out at the vineyard talking to somebody. I was like, it's a Wild West out here still, man. You can almost do whatever you want on the growing side. And the problem that Texas has had up till now is there's been no differentiation, right? Because it doesn't make sense. If you're developing 5-10 acres at a time, it doesn't make sense to go buy a $500,000 tractor with another $500,000 worth of implements, right, just to run mechanization. The reason we develop in half section increments is because that's the sweet spot, right? That's where you hit your maximum use of your folks and your tractor and your implements without wasting any of it, so to speak. It's always busy that way. What we're doing is we're taking advantage of being here on the front end where everybody's kind of doing the same thing. They're doing BSP, focusing on premium and ultra premium wines, to say, hey, nobody's focusing on doing value grapes or value wine. It's all imported. So what we want to target is that huge market segment in the middle that everybody else pretty much is, unless you're a wine aficionado or you're buying gas station wine, is that, $7 to $20 bottle of wine. And we want to get that to where we can do it 100% Texas. And then also for other wineries outside of Texas, be able to provide them something to get their costs down and source from somewhere else.
I even know, like, as far as kind of like the demand for wine, I know that, it's always been consistent. It's just like one of those beverages that is always going to be drank upon, in America, all over the world. What are you seeing as far as kind of your data on the ground as far as kind of like the demand for wine, especially during the pandemic, and even, you know, as we move forward, you guys are finding innovative ways to cut costs and, you know, and get it to consumers quicker. What can you kind of comment on regarding the demand for wine on the industry?
So that's actually very accurate. So on a national level, right, the data suggests that it's pretty much flat or decreasing slightly even on wine consumption. On a state level, in state in Texas, it's increasing, and that's due to changing population structure, folks coming in. There's a whole lot of factors that are working towards that, but it looks to be increasing. The data shows it's probably increasing in state. On a national level, it's flat to decreasing, which is interesting. What you see is more movement towards alternative beverages, which is somewhere we're positioning in our other business, Firm Forge, like hard seltzers, piquette, canned beverages, things like that. So that's where we're really moving on the processing side to be able to take advantage of things like that, because we have the raw materials and we're going to keep putting in more vineyard. So you can make anything with sugar into alcohol.
Exactly. Yeah. Because you're looking at like the different beverage trends and things like that, and just kind of the different things that you're seeing in the marketplace. But, you know, you guys having those base materials, you'll be pretty flexible and providing the needs for the marketplace. So, yeah, appreciate you sharing that. And as far as kind of, you know, as we talk a lot about syndications, we bring on a lot of sponsors to talk about the investment opportunities and how we can get involved in that. Can you talk about it from a syndication investment standpoint on how past investors can get involved in this, and then how does it structure? Are you buying into the business? Are you buying the vineyard, and the difference between those two?
Yeah, that's a great question. So it might help to have some context on how some real estate guys got into the vineyard, right? Like, why choose this niche? It seems high risk, right? It's farming. Everybody knows how crazy and hard farming is. Work a whole lot for not a little. For just a little bit, right? You spend a whole lot to make about this much after you pay the bills. And that's why a lot of farmers out here are actually switching over to grapes too. But, you know, in my underwriting, one of the things that was a hurdle for us that we had to meet to actually jump into this was, you know, this risk profile is different. It's not necessarily worse. It's just a whole lot different. It's not something that we're used to coming from residential real estate. So it has to have a lot of meat on the bone, right? So for example, for our underwriting, you know, I would cut back yield significantly from what we know we can do based on past experience from people we know and from experts. You know, we would run pricing. We still run pricing at, you know, 38 to 40% of what market is now, and just assume that out in the future. And if that doesn't work, you know, if that's not providing great returns, we're not going to do it. So the way we got to syndication was, you know, like I said, we saw that there's a big market gap there. There's room for disruption in that value category. And we have 3,000 to 5,000 acres, just depending on what number you peg yield at per acre, to backfill for the state to get rid of these imports. And if we do that ourselves with a 5-year turnaround time to get a vineyard from, you know, raw land to something about what full production would be is on the 5th year, that's a long turnaround time, right? Vineyards are a long-term asset. They're like residential real estate. You know, you amortize these things over 25, 30 plus years. You have to take care of them, but they'll produce for you if you take care of them. But we weren't going to get there on our own, right? It's gonna take us a long time. We're never going to have the ability to share our vision and our methods fast enough to make it happen. So that's how we came to synthesize syndication with it. So what we're looking at doing is we're going to combine single property syndication with vineyards. So what that means is you don't invest necessarily in like Texas vine country. We don't, at least right now, we may do this in the future, but have like a fund of funds or a fund that invests in vineyards or anything like that. But what we're going to do is have the opportunity for limited partners, LPs, to come in on an individual vineyard. So our development block is, like I said, 320 acres gross, nets out to about 290 acres of vines after turn rows, equipment, barn, and things like that. And those investors will own vines, posts, land, tractors, implements, all the assets that go along with that vineyard and the brand associated with that vineyard. And the benefit you get by teaming up with somebody like us as a GP is you automatically get that operator, right? So it's truly passive. You can actually own a vineyard that takes a lot of maintenance and a lot of technical knowledge in a new market that's growing really fast without really having to know that much about it. You know, you have to know how to underwrite, right? Because you got to know what a good deal looks like. But yeah, that's kind of how we're wanting to do things going forward to syndicate individual.
And as far as kind of like a time frame, I know some other syndication, they'll have like a 3 to 7 year time where they're either going to exit the deal, refinance, and things like that. Is that typically how it's structured there? Is it more like long term with cash flow? Once once you kind of buy in the land, is there kind of like a period where you kind of say probably the first or second year until everything is growing and you guys are done producing and selling? Is it kind of structured in that way?
Yeah, so on vineyards, like I said, it's about a 5-year turnaround time from planting to hitting that steady level of production. On the first year, you put the vines in the ground, train them up a little bit on the wire. Second year, you train them up the wire. Third year, they're starting to produce some fruit, but you knock it off. The reason being you want your vine to be big and sturdy so that we can grow these yields and quality that we want. Fourth year, you do a little bit of the same, but you crop a little bit. So you get a little bit of income. Fifth year, faucet turns on. Money really starts coming in there. So it's a long turnaround time. So it's really a generational investment, right? So there are a lot of folks that this kind of investment is not for, and I think that's really important. That's one of the first things I hit on whenever I talk to somebody about this is, who is this not for? This is not for somebody that wants a highly liquid asset, right? People don't just run around buying, $10 to $30 million vineyards willy-nilly, right? You've got your Constellation and Gallo out in California and the West Coast, but besides that, not a whole lot of people doing this. So you have different exit strategies. Your first exit strategy is it's a generational asset. You just get cash flow, and the way we manage it is to keep those vines running at peak capacity for 25 years while putting cash aside, hold back cash aside to continue to replant vines as those vines age out of production. That way you hit, your growth curve kind of goes like this, right? It goes slowly, hits a peak, flatlines, and stays like that for 25 to 30 years. And as that time frame goes out towards that horizon, we continue to replant. So it's not for folks like that want to be able to sell it and get out of it. You can refinance. That's pretty easy. There's a lot of access to refinance. So you can do the snowball method, right? Where you buy the asset, you're getting an investor payout in 7-8 years. They've got all their capital back, and you refinance. The vineyard's worth exponentially more based on cash flow. And you use that cash to either distribute to your investors or you continue on and you put in your next block. So basically they get, a second vineyard block for little to no cost, and continue their cash flow coming in. So it's a good exit method that way as well. And then the third exit method is like I said, somebody like a Gallo or Constellation comes in, that really this is the method that they use, right? Is significant mechanization. So they could come in and buy something like this as well.
Yeah, I'm thinking about it. I like it from like a diversification standpoint, because I know it's like, especially our past investor group, we have assets that's cash flowing from day one, and then this one you had mentioned like a generational thing, people that wants to buy into the vineyard and then pass it on to their heirs and just have that continued cash flow, knowing that it's going to be a 25-30 year investment, because like I said, and then even further as you guys continue to regrow the old ones and continue just kind of to keep that process going. But I definitely like there's definitely a gap that you guys are filling for the state, to kind of bring that up, and then, disrupt the kind of the usual where you guys are just importing juice and is not really from Texas, and then now you can access the growing population of Texas and the other, states that don't have that supply as well. So it's kind of like, it makes sense on that standpoint. You had mentioned in your last comment regarding like you are very smart as far as kind of analyzing and underwriting these type of deals. Can you kind of lay out just like a high level overview for limited partners on how they would see this deal and kind of analyze it to see if it's something that makes sense for them?
Yeah, sure. So I think it's best to look at it kind of like I said in comparison to a multifamily syndication, right? So you're going to want to look at what is the what is the payback period on your capital? What are the exit strategies? What's your cash on cash return on a yearly basis? And it depends on the structure, right? How you structure the splits and everything, of course. But on like an entity level, the cash on cash is excellent. You're looking at let's see, I've got my models pulled up here as well. I mean your LP cash on cash returns are well over 15% stabilized, and in the initial years where you're making sure you pump a whole lot of money back to your LPs, you're looking at 30% cash on cash. Where you have downsides to this kind of method versus multifamily is IRR, right? Because it's time based.
You're right.
So you're not looking at any payout, to your LPs until year 4 and 5. So you have a big time lag there. It's like a snowball, right? It's not doing a whole lot rolling down that hill at first, but once it gets going and starts accumulating, it gets big.
Well, yeah, those are definitely big returns. Like I said, it's IRA. So it depends on like the type of investor. If they want, just a truly, just to put into an asset they know it's going to be producing at X period of time, and they get more educated on like the wine process and the demand and need. And if you have a very reputable sponsor that has the experience there of producing these the fruit and getting all of the production out of it, it definitely would make sense for people who are keen to these types of investments that can willing to take this type of risk.
Yeah, it's just different, right? I think one of the hardest parts in communicating this sort of investment is the risk profile. You have some risks that are similar, right? A vineyard in an apartment complex can catch on fire, though we don't have really any fire risk out in West Texas plains, especially compared to California because we don't have trees. It's all cotton fields as far as you can see, or vineyard. So not much to catch on fire, but we have hail, we have freezes, and we do a lot to mitigate against those. But there's crop insurance and all sorts of things that go along with that. But really, it's very similar to multifamily investing. If you looked at it more from if you were syndicating a development of an apartment complex,
exactly,
very similar to that.
Yeah, it's very interesting. Yeah, like I said, we haven't had this type of investment discussion on the show, and like I said, it's very interesting. But lately, we've been talking to a lot of investors regarding just diversification and into different industries, and of course, like I said, I know wine has just been always a demand. It may not be at its peak, but it's definitely always have its base of drinkers out there, and then as you see different trends go along. I know my wife is from Europe, and they're always constantly drinking wine in her country, and I don't know for the other countries, but they're always drinking wine there, and it seems like it's always at our table. So it's like it always has a place in society, So it's always one of those things that people are familiar with.
Yeah, and that's almost a trick, right? That's a big trap in the vineyard industry. There's a running joke. A lot of people, you'll talk to about vineyards, and they'll say, what's the quickest way to make $1 million in wine or vineyards?
Yeah,
start with 2.
Yeah, exactly.
Right. Like that's how you make $1 million. You start with 2, and you lose the first half. And that's because a lot of it's a passion play, right? People get so wrapped up in the mythos and the cool stuff around wine, and I like it, but I'm not going to invest in anything that's not going to make a return, right? Mm-hmm. So that's kind of where me and my family come in on this deal as well. It's like, hey, we need to be solidly grounded in financial strategy, right? We can't go into this.
Yeah, absolutely makes sense.
Passion play.
Absolutely. Yeah. And this last question before we get to our personal development section is, and it may be from left field in regarding, because I'm into keto, which is like a certain type of diet. And then lately I've been reading about different wines that are coming in that are keto friendly. Have you been hearing about that? Because I know that's been a growing trend for this. So they're trying to, make it more of like a lifestyle thing. If you have to be on this restrictive diet, well, not really restrictive, but this specific diet, that you kind of got to have these different things. So they're providing wines and different type of drinks that you can have that are sometimes okay. Have you been hearing about that also?
I've been hearing about that in certain beverages. It's hard. I'm somewhat familiar with keto. It's hard to get any alcoholic beverage very keto friendly, right?
Yeah, right.
a lot of that alcohol is processed directly into sugars, so it gets counterproductive quick. And you really don't have any fats and not a whole lot of protein in the wines. And some of those natural wines, you'll get, the yeast and things like that. So you'll have some proteins, but yeah, no fats in wine. It's kind of hard to run keto on that.
Yeah, it's more of like
but there are a lot of natural wines, like you're saying.
Exactly. All right. Awesome. Yeah. So to learn a little bit more about you, I know we talked, a couple weeks ago, and then kind of chatted on the phone, kind of learn a little bit more about each other. But for the audience, can you kind of break down what's a typical workday for you, and do you in particular have any special morning routines?
Yeah, sure. So my only special morning routine that I've done up until about a month ago is I always walk my dog about a mile or 2 miles every morning, just to kind of clear my mind. Toward the latter half, I'll listen to, one podcast, specifically something mindset based. If I have a new episode, I'll listen to that. And then I make breakfast for my girls, and I immediately get to work. I never check emails first. I always do at least a couple tasks that are mission critical for the business and for me to get done that day. That way I don't get off course. But I haven't been doing that the last month, and that's because I have a newborn baby that was born on the 7th of December. So
congratulations.
Been a little bit busy in the mornings lately.
They tend to disrupt any type of morning ritual that you have, and for good reason, but like I said, it is what it is with the kids and everything. I have 2, and it's sometimes they just completely throw me off if I'm not up at 4 a.m, and even sometimes that's not even enough. So it's always a constant adjustment. But that's what comes with parenthood. So but then again, like I said, it's good that you had a baby. So congratulations there. And as far as kind of like any tools and resources that you use electronically or physically that help you be more productive during the day.
So the one that's helped me the most in the recently is definitely switching over to using a CRM religiously, right? I'm using just HubSpot right now, just something free. But having that accountability where you're getting that load of things you have to do and things you have to think about down on paper, whether it's virtual paper or real paper, and getting it out of your brain so that you can free up that RAM, in your head, and just do the task when you schedule it and when it comes up for you, and call that person when you schedule it when it comes up, and as soon as you finish that call, schedule the next one, right? It makes it so much easier to progress quickly, and that's really helped me, both personal life and business life. Keeps up with friends better too, and you kick the can every time you call your buddy. Hey, make sure you check on them. 3 months if you haven't called them already.
Yeah, right. I like that from the personal side. Just because like me, like I said, if I don't have it in the calendar, like it doesn't get done, and because like I said, things will pop up, and it's good to even have even a little task, which even for calling a friend, I think that works as well. Look, so with all your success and all the the blessing of you having a baby and all the things like that, what can you say that you're most grateful for?
Definitely my family, especially my wife. My wife's phenomenal. She is definitely the smarter half of us. She's actually an industrial engineer too, and fluent in French. She's very, very smart, and she's been staying home with the kids. We have 3 girls now, between 4 and 0, and she does a whole lot to make sure that I have time to do what I need to do to keep pushing our family and our business forward. And whenever one of us has a soft spot as far as we're not able to take the lead, we're doing a really good job of jumping in there and filling the gap to make sure that we get everything done on the family side and the faith side, which is super important. If you don't got all that worked out, the business side doesn't mean a whole lot. So definitely my wife, I'm most thankful for it.
Absolutely. Yeah, very well said. I'm pretty sure she'll appreciate hearing that as well. So, but yeah, and then
well, hopefully she won't watch this and laugh or anything, but
yeah, we'll make for a good, reel at some point. So, well, I appreciate you sharing that. So how do we get in contact with you if and people have interest to learn more or to just, have a chat with you and things like that?
Yeah, sure. So we're our Texas Vine Country. Currently, our website's under construction. It should be in Mark 1, probably sometime around when this is released. So TexasVineCountry.com. If it's not working when you first look at it, it'll be working soon. FermForge, FermForge.com. That's our custom crush winery facility. And you can reach me through my FermForge email. It's Mason, my first name, at FermForge.com. And happy to talk with anybody, real estate, wine, vines, whatever.
Awesome.
Anything
Mason,
I can help with.
It was a pleasure having you on and learning a lot more about this industry. Is very interesting and exciting, especially hearing about the demand and the opportunities that's out there. Best to you, best of luck, and congratulations to you and your family. And we look forward to connecting with you again soon.
Thanks, Dwaine. It was a pleasure being on here. It was an honor. I really appreciate you and everything you do and the value you bring.
Absolutely. I appreciate it. And take care and look forward to talking to you soon. Hey there, this is Dwaine Clarke, your host of the Wealth Through Real Estate Investing Show. I want to thank you again for tuning in and hope you're enjoying this valuable content. While I got you for a quick minute, I wanted to send you an invitation to join our growing investor community. It's called the Passive Investors Club. It's a group of like-minded individuals like you who are seeking financial freedom and to build true wealth through passive investing in commercial real estate. We take a totally different approach to investing that is opposite, that is pushed by the financial advisors and what we see in the mainstream media. We like to invest in real assets that we can touch and understand and that are not subject to the wild swings of the financial markets. We don't want to be part of the herd who pursues the traditional route, leaving our financial future to Wall Street. So if you're interested in joining our group and to sharing resources and opportunities, then go to PassiveInvestorsClub.com/join. Joining the club is completely free and there's no obligation. And all our members receive our free Passive Investors course along with tons of resources and content. So again, PassiveInvestorsClub.com/join.